Get the latest on what's going on this earnings season, meets, beats, and more in Zach's Earnings Scorecard.
A couple of apparel companies and a retailer thrown in for good measure. That's what Eric Dutram's going to talk about here, as you've been keeping score on Michael KORS.
Yeah, Michael KORS is up first. Very rocky time for this company in terms of its recent performance, despite doing pretty good when it comes to beating earnings estimates. If we look to the chart right here, we can see exactly what I'm talking about. The company hasn't missed in over 4 years, as we can see on this chart. And as we can see, a couple of years ago, earnings estimates were really trending a bit higher. They've sort of flatlined here over the last couple of years, which is definitely a concern. But as we can see, the real concern is the share price, which has gone from about $100 a share down to this 54 range. Definitely a concern with some of the broader issues we're seeing. A lot of consumers out there are using a lot less accessories, buying a lot less in general. So that's a bit of a concern coming into this report. The stock does have a Zacks rank number 3 right now, just got upgraded out of sell territory, and it does have an A for its VGM score. So a little bit of promise for this company going into its report, but given the track record and its performance in earnings season, I'd probably give this one a little bit of leeway before jumping in. It does report before the bell on the 10th.
Okay, Ralph Lauren.
Yeah, Ralph Lauren is next. Somewhat similar story than what we've been seeing with KORS, but a little more negative in terms of both its earnings estimates and its actual performance. If we look to the chart right here, we can see what I'm talking about. Shares have gone from about $188 a share down to this $86 range. It does have a pretty good history of beats, though, in that time. 5 beats, this missed back six reports ago. But as we can see, the earnings estimates have really fallen off here for this company. So not a whole lot to like about this name. It did get upgraded from strong sell territory into just sell territory, but hey, it's still a sell. So still, so not that much to like about this name, especially with a C for its VGM score these days.
All right, and then finally, Kohls, the retailer. Now, one thing about retailers, you got this back-to-school season coming up here, and whereas we approach the middle of August.
Yeah, I mean, we definitely have back to school, and that could be a catalyst for some of these names, but we've seen a lot of consumers buying a lot more stuff on Amazon and other online sites. Mm-hmm. And let's face it, a lot of companies are running into this issue of providing consumers with too many discounts in years past, and so now everyone's trained to really want the discounts, so that's really hurting sales numbers in general for a lot of names. We can see that trend with Kohls as we see in this chart right here. The company has seen earnings estimates, really fall off over the last year and a half. Just had a miss in its most recent report, and as we can see, the earnings estimates are pretty much flat for this year and next year. So, not a whole lot to like about this one. It does have a negative earnings ESP, so the most recent estimates have been a bit lower than even the figures we just talked about, and it also has a Zacks rank sell. Not a whole lot to like about this area, given a lot of the headwinds and the behemoth that is Amazon sort of crushing a lot of these names.
Yeah. All right. Own either of these?
Do not.
All right. Check out more information on our website, Zacks.com. If you're not there watching this video, all you need to do is get over to the homepage. You can link to it all from there. With Eric, I'm Terry Ruffalo.